में ना आए तो जरूर डराना उसको।
डरा दो।
ठीक है।
Hello and welcome to Ecoholics. A very good evening to all of you. So we'll start a discussion again, very important discussion regarding the goods and services taxes. So goods and the services tax, which is GST. So since its inception in 2017, GST is affecting the lives of the people as well as the revenue of the government. Now GST plays an important role here in order to bridge the gap between the revenue and the expenditure. Now GST is an important thing, and that we need to understand that regular decrease in its revenue or regular shortfall in its revenue is of a major concern. Now if we see that GST collection in the month of October 2019, which recently published the data by the government of India, that declined to 5.3%. If we say year on year basis, year on year basis means the October 2018 comparison. If you see the October 2018 comparison in October 2019, the revenue shortfall of 5.3%. Now understanding the core concept, although these data are not important, the important thing that we need to discuss here, that what are the reasons behind it, because in the examination they will ask about the reasons. What are the reasons that how government can mop up extra revenue in order to meet the target? So these are the reasons that you have to give in the examination. So for that you can understand that in the month of 2019 October, revenue collection was around 95,000 crores. So 95,000 crore was the revenue. Now major reason behind the fall in the GST collection, maybe that is the slowdown in the consumption. So when consumption is less, obviously the indirect tax collection is also less, because whenever we consume we pay indirect taxes, and these kind of taxes are very important in order to raise the revenue from all other sides. Now if you see the overall GST collection from April to October, that is 6 months, we can say that has increased to 3.4% year on year. So it is a good sign. You can see that this year April to October, if we compare to the previous year, that is 2018, that revenue rose. If you see the revenue of October 2019, that was around 95,000 crore. If you see the last month, that is September 2019, the revenue was around 91.9 thousand crore. So you can see this is also the improvement over the September. Although we can say that these improvements are very meager, but the target for the government is at the least government need 1 lakh crore every month. So this is the target, that collection must be come at around 1 lakh crore of GST every month. That is in order to meet the revenue estimates. Now if we see the required rate for, we can say, for November, December and 3 months of January, February and March in 2020. So we can say for the 2019-20, the remaining 5 months, the run rate that we need, the required run rate, that is around 1.34 lakh crore. So every month we need revenue collection of 1.34 lakh crore. So this is, we need an eye, you know that this is obviously not going to meet seeing the current economic situation of our country. So 1.34 lakh we need in order to meet the revenue estimate. Now we see the report, a report by the Kotak Institutional Equity Research. So this report says that the current rate of the government, if government maintains this rate of revenue collection, it will see the shortfall of 90,000 crore of CGST and IGST and around 1.3 lakh crore in SGST. So the reasons behind this are many, we can say, because there's still a pressure on the government in order to see these revenues and how government can increase these revenues. Now the shortfall in GST collection accompanied with both the shortfall in income tax as well as corporate income tax. Now you know that corporate income tax always also remained weak, because we've seen in September 2019 what government did. Government reduced the corporate income tax by almost 10 basis point for the domestic companies in order to boost the investment and the economic growth. But that cut in the corporate income tax cost government around 1.4 lakh crore. So you can see that both direct taxes as well as indirect taxes receipts are actually under pressure. And another reason is, if you see the nominal GDP, so nominal GDP, which also takes the changes in the price level in the economy, nominal GDP also falling. And if you see the nominal GDP, because if you see the fiscal deficit and everything, we compare with the nominal GDP. If nominal GDP will fall, obviously that have implication on the tax buoyancy. What is tax buoyancy? It means increase in the tax revenue without any increase in the tax rate, but with the increase in the tax base. So tax base is the nominal GDP. Now if you see the GST collection, which is in the month of November, which is currently we are living, so in November 2019, that is still, we can say, they are very unlikely to improve. But you can see that in November only, the people, just because of the, we can say, festive season, you will see that certain demand hike. But again, if you see December, January, February and March, remaining 4 months of this fiscal, they will obviously, you will not see any quick pickup. So you can see that this demand will increase in November. So if the data come in December about the November GST collection, just because of festive season, the excessive lending by the banks due to festive seasons for the consumer durable goods, etc. So you will see that there must be some quick turn up. If you see the GDP growth rate in April to June quarter, that was lowest in almost last 25 quarters. So all the high frequency indicators, they are showing that no signs of improvement in near future. Now these are the reasons behind. Now if we draw the table is very important. So we'll draw the one simple table. Like if you see the gross, very important to understand in examination. So many times they have asked the question about the tax receipts. Now if you see the gross tax revenue, that includes the direct taxes and indirect taxes. So this is, we'll discuss here, and these are the gross tax revenue, and this is the direct tax and the indirect tax revenue. Now if we see under direct tax, the main taxes are corporate income tax and the individual's income tax, and under indirect tax we have custom duty, the excise duty and the goods and services tax. So for the financial year 2019 and 20, so for the financial year 20, gross tax revenue that we are expecting according to a budget estimate, it is around 24 lakh crore. But you can see that 24 lakh crore is the budget estimate. Among that, 13 lakh crore approximately comes from direct taxes and 11 lakh crore comes from the indirect taxes. So in many season or in many examination, they've asked the question about that government of India collects more tax revenue from direct taxes in comparison to indirect taxes. So they ask about this statement is correct or not correct. So for that you can see that government is aiming more revenue from the direct tax. If you see corporate income tax, it is around 7.6 lakh crore, and about income tax it is 5.6 lakh crore. If you see custom duty, it is 1.5 lakh crore, and if you see excise duty, it is around 3 lakh crore, and for GST we have 6.6 lakh crore. So these are the estimates that we are having. Now this is very important table in order to understand that which tax actually aims as the highest. Now if you see the GST run rate, that is short, if you need more things, like for example in the collection, if you see in the April, that is April 2019, government collected around 1.1 lakh crore. That was the highest in the history of GST in India since 2017. So what was the reason? Main reasons were that the economy received a lot of investment in manufacturing and manufacturing activity went up. So the GST collection also went up. If you see the other things, very important other things, like if you see the fiscal deficit. What is fiscal deficit? Fiscal deficit shows the borrowing of the government. If you see the fiscal deficit, in the month of September end 2019, government already covered or incurred the deficit of 92.6% of the total estimate. So you can understand in the just for 6 months, the budget estimate was around 7 lakh crore, and right now till September, the fiscal deficit was 6.5 lakh crore. So you can understand obviously government will now in this fiscal will overshoot this fiscal deficit target. Now if you see that important things apart from this we have, because in the month of November and the finance commission will also submit its report for the next 5 years, and that will be implemented from April 2020 for the 5 years till March 2025. So this finance commission will also keep in mind the revenue collection of the government. Very important, because if you see that fiscal pressure already government is feeling, and this kind of fiscal pressure that finance commission will take into consideration in the devolution of the tax. So the successive rounds of GST cuts also result in the low revenue, but we can say that it will increase the tax base. So more and more number of people will come if you reduce the tax rate. So these are the reasons we can say that why this GST collection is pretty low. Now if you have any doubt you can ask and we'll move forward then. Mainly we can say that the GST revenue, mainly we need to simplify the GST. So if you see the simplification of GST, first of all we need the administered or administrative measures, and if you improve this, collection will improve in the next few months. If you see that the other thing is a stimulus to demand. If we give push to demand, that will also increase the GST collection in our country. The mainly thing is that whenever economic activity will go up, that will also give more revenue to the government. So these kind of things that we have seen in the previous years in the case of India. So you can see that these are the things will contribute to the economy in the great part. So if you have any doubt you can ask. So So tomorrow is Sunday. We'll not meet to we are not meeting tomorrow. So 10:30 p.m. we'll meet on Monday, and that is on a daily basis to Saturday. If you see that this time we discuss the important things regarding the current economic discussion and analysis, all the current affairs, which is important for especially the examinations of UPSC, etc. So today itself the RBI examination conducted, and a lot of questions were from our discussion, live discussion, as well as the courses that we are conduct. So if you are interested, we are starting with the RBI course as well, and you can visit the website for those. So this live session 10:30 p.m. we'll discuss about the current economic discussion and analysis, where I tell you about, or where we discuss. So this is a discussion. I don't want that discussion should be one way, so you can also participate by sending your queries, sending your suggestions, or whatever you want to say from the chat box. If you have any doubt, you can always ask. These are the kind of things that we analyze, we discuss. So this is like a two-way discussion that we need, and this will improve your understanding of the Indian economy. That will helpful in certain examinations. First of all, UPSC examination, that is the IAS and AES, that is economic services. Apart from this, in RBI examination, the bank PO examination, bank SO examination, these are the things very helpful, and all these discussion are very vital in your interview calls. So Aftab is saying something, so we'll discuss that. So first he's saying that reason for the shortfall of the revenue are the following. Number one is slowdown in the economic growth. Obviously, slowdown in economic growth is the major reason, because if economic activities are less, it means demand is less. If demand is less, people are not spending more on consumption. So if they are not consuming, it means they are not buying things. If they are not buying, it means they are not paying indirect taxes. Simple thing. The other thing is like global trade war. I don't blame the global trade war more, because it increases our export to the United States of America. If you see 19% rise in the exports after the trade war, so that is in favor. So we cannot say that global trade war is the reason behind the shortfall in the tax collection. The multiple tax rate increase, complexity. These are the basic thing. I don't think so. Actually what GST Council is doing, GST Council has been simplifying the tax structure. Multiple tax rates are there just to increase the progressivity of this indirect taxes, because indirect taxes are generally regressive in nature. So here we can say that multiple tax rate does not actually increase the complexity, it actually increase the equality. So a lot of necessary items comes under 0% or 5%. A lot of luxury sin goods are coming under 28%, because majority things will come under 12% and 18%. Compliance has miles to go, like 6 cropping up of the new cesses. So compliance is important, and compliance will improve if you decrease the tax rate. So decreasing tax rate obviously are fetching the same amount of revenue, around 90,000. If you see, except for April 2018 and April 2019, government collected less than 1 lakh crore. That's the data given by the government. If you see the budget documents of PIB, you will be able to find this, whatever I am saying. So these are the things important. If you see the next what he's saying, so next he's saying slowdown in automobile sector. So again, slowdown in economy, more or less. The another one is inadequate compliance with the MCA and the black money. No dear, we cannot say that the inadequate compliance. If you see the MCA rules are stricter and stricter, and they impose heavy penalty on the companies they do not comply with the GST tax laws. Money laundering is, we can say, all the time this is a good option. If you see the other points, like spike in the oil prices, a spike in the oil prices, we can say that this is one of the reasons behind the reduction in the demand. So this we can say is important. So the next thing you are saying that compounding option in GST stand, or please tell. So compounding scheme under GST, so that is important scheme we have. Not very important for your examination purpose, but still you have asked. So compounding scheme provides, we can say, a simple method of calculating your tax liability. It reduces the administrative cost of the small traders for the GST regime. Now, under compounding scheme, the turnover depends on the turnover of the registered person that they can pay the taxes. The scheme provides simpler method on the tax liability as well as the, we can say, filling of the tax returns. So compounding levy scheme is like same as the VAT composition scheme that we are having. Like certain restaurants are charging 5% flat, so they are not availing the ITC, that is input tax credit. That is the, we can say, the compounding scheme. So under the composition scheme, that compounding is allowed, and that is allowed under the other schemes like 1% for some, 2%, 5%, 6%. Like if you are opting for 6% of GST, and suppose your turnover is 10 lakh rupees, so the 6% of 10 lakh is 60,000 rupees you have to pay in the tax, irrespective of your revenue as well as profit, cost, etc. So that is what we call the compounding scheme under the GST. So in short, you can say that. Any other doubt you can ask, otherwise we'll wind up the session. So follow us on other social media handles like Instagram, where we provide daily questions. And apart from this, in the YouTube channel, don't forget to subscribe, because we provide in the community tab daily questions regarding high level economics question. You can visit our website for the special courses on the economics optional, Indian economic services, and other examinations. So we'll be starting new batches from the 15th of November of economics optional, and other batches followed by one. So you can say that if you are interested, you can always contact on this phone number and also visit our website. So are you asking the question, or shall I wind up? So that's it for today, and thank you for tuning in, and thank you for subscribing Ecoholics. Yeah, input tax credit means, input tax credit is simple thing like suppose you are making a cake. Here what we need is, suppose we need wheat, we need bread, we need cream, and we need certain toppings. So what is input tax credit? Suppose a person bought a wheat at 10 rupees per kg, then with this wheat they make a bread, and that bread cost around 20 rupees. Then they added the cream of 50 rupees extra, and the toppings of around 70 rupees. So what's the total cost? If you see the old tax regime, it was like same, adding 10, so 30, and 30 plus 50, 80, and 80 plus 70, they got 150. So in the old tax regime, tax was imposed, suppose the 10% is the tax rate. So 10% of this 10 rupee, 1, 10% of this 3 rupees, 10% of this 8 rupees, and 10% of this 15. So if you see the tax, total tax collection or tax liability is very, very high. If you see, that is 23, 26 and 27 rupees as the tax. So you can see the cake price would be in the old tax regime 150 plus 27, so that is 177. If you see under GST, so under GST the input tax credit they can avail. It means if a person pay 10% tax on the value addition 10, so the bread owner can reduce this liability to the on the value addition. So what they will do, they will pay 10% only on the value addition, so that is 2 rupees. Then plus cream owner will also pay the taxes but only on the value addition, not on the previous chain, so that is 5 rupees, and again on the value addition, that is 7 rupees. So total tax liability is 7 plus 5 12, 14 and 15. So under GST, if you see, that is price would be 150 plus 15, so that is 165. So you can see the difference of 12 rupees into the old tax regime as well as GST. So input tax credit means this tax credit of 1, tax credit of 3 and tax credit of this 8 rupees, that is what we call the input tax credit. So I hope you understand this example. So that's it for today, and thank you so much for tuning in. Thank you for subscribing Ecoholics. Till then, thank you so much. We'll meet on Monday. Tomorrow is Sunday, so we'll not have our live session. We'll meet on Monday 10:30 p.m. Till then, thank you so much.